everyone. My name is Lou Niedelman, and I'm a partner with the law firm of Cooper Levenson. And joining me today is my partner, Brian Barr, who's been with the firm for approximately 20 years. Both of us specialize in the insurance field, handling insurance coverage matters for both personal and commercial clients and insurance companies. And we also defend insurance companies and their insureds in litigation where the insured is sued, whether it arises out of a construction accident or a business premises accident. So let me begin the recording and the video, turning myself over to Brian, and I have a few questions of Brian. And today our subject matter is going to be general liability insurance for businesses. So are you ready to step up, Brian?
Yeah, sure, Lou. Thank you very much.
All right.
As a business, you are going to need general liability coverage to protect you for various liability claims that may be asserted against the company. They could rise from a slip and fall inside your business, a slip and fall outside your business, but could also include claims that may not seem to be related to liability, things like false arrest, false imprisonment. Maybe if you are a bar or an establishment that serves alcohol, you may be sued in that capacity as well. So general liability covers a scope of areas.
And it also includes employment liability if you're the subject of a claim by an employee for harassment, whether it be racism or sexual and so forth. So there's exposure there too.
Yeah, along with,
yeah.
Go ahead, I'm sorry.
I was just going to begin by asking you, Brian, what types of liability does a general liability insurance policy cover in general?
Well, again, it depends on the scope of what your business does. I mentioned a few examples of what types of claims would be covered by a general liability policy, but the general liability coverage is going to be tailored to the nature of your business. For example, if you're a construction company, you want to make sure that it will cover you for construction injuries on the job. If you sell a product, you want to make sure that if the product gets out in the stream of commerce, that if an injury is caused by that product, that you're covered by that product as well. So it really depends on the nature of your business to tailor what endorsements and what coverage you need for your particular business.
Thank you. So depending upon what type of business you are operating, what type of liability insurance is there for that type of business? In other words, is there insurance coverage for specifically construction companies? Is there insurance coverage specifically for bars? Are there exclusions in various policies that you experience?
Yeah, again, the nature of your business, there's a general form that most liability insurers will use that have general terms and conditions, general exclusions in them. And then again, particularly to the nature of your business, you can obtain additional coverage. For example, if you do serve alcohol, you can get alcohol liability coverage where most GL policies do not have that. So again, you're going to tailor what endorsements you need based on your type of business. Along those lines, there's two types of liability coverage. There's a claims made coverage and an occurrence coverage. Now, an occurrence coverage is for things where you can think of a car accident. The occurrence is the date of the accident. A slip and fall is the date of the slip and fall. But there may be some other types of claims that don't fall in that easy compartment, such as a product's liability claim. A company may sell a product 10 years ago that causes an injury today. So what happens in those types of cases, most of those coverages are called claims made policies. In other words, a policy that exists at the time the claim is made is the policy that covers the loss. So the example I gave you sell a product 10 years ago, the injury happens today, the claims made policy that covers you today is the one that would cover you for that loss. Now, in that situation, it's incumbent on the insured to both report when the claim is made to the carrier so that they can open up a claim to cover that type of claim. So there's really two types of claims.
And most claims-made policies are policies that are issued to professionals, are they not, such as insurance brokers and engineers and lawyers and doctors, rather than an occurrence policy?
Yeah, that's correct, Lou. But they also tend to apply to products liability insureds as well. And again, because a product's liability claim, it wants to make sure that the policy that is in effect at the time of the accident, not necessarily when the product is sold, is the one that covers you for the loss.
And just to be clear, so our audience has some clarification, what we're talking about is not workers' compensation, where an employee is injured in the course of their employment with a particular employer and files, by reason of an injury, a workers' compensation claim. That's all separate apart, separate insurance. Is that right?
Yeah, that's right. And keep in mind that there are different types of insurance for different types of liability. Our last seminar that or YouTube presentation we gave, Lou, you addressed auto liability. A GL policy has a specific exclusion for auto claims. It also has a specific exclusion for injuries to employees, because again, workers' compensation is the line of coverage that covers those types of claims.
Very good. Brian, can one use their agent or their broker to procure liability policies and to create a dialogue as to what the needs are for a particular business?
Yeah, your broker or agent will help you and direct you as to what specific endorsements you may or may not need in your policy. As part of that process, an insured will fill out an application that will describe the volume of business, the number of locations it has, and a GL auditor may come out to inspect the property to make sure there are appropriate fire exits to make that type of audit. So it's important for the insured or the business owner to make sure that the application is complete and it's accurate. So that way the insurance company can make a risk assessment. Number one, do they want to underwrite or cover this insured? And number two, what kind of premiums they're going to charge. So it's important on the latter end, because if there is an accident and the particular risk was either not disclosed or maybe misrepresented, the insurance company can deny coverage for that. So it's important to work with your agent and broker to make sure that the information you provide is accurate, truthful, and complete.
And the importance of the application can determine and drive whether or not there's going to be coverage going forward. I'm representing a restaurant, and their application indicated that they don't host parties, they don't have alcohol, they don't have DJs. And several years into the policy period, there was a party with 300 people. There was alcohol, there was a disc jockey, there were 3 shootings, and the insurance company denied coverage because it went back to the application and they found that the application did not cover that particular event.
Lou, that's an excellent point, because what happens is every year there's a renewal, and sometimes the agent or broker will just use the information from the prior year without checking with the insured to say, hey, has your business changed at all? While you weren't hosting parties or having DJs at the time you filled out the initial application, are you doing that now? So again, it's important to update and make sure your applications are current.
And based upon what we're talking about, all businesses should make sure that the application is completed by them and not their broker, because if the case arises where the broker completes the application and the information is inaccurate, then there may be a claim against the broker or agent. So businesses should not lose sight of the fact that they have a claim against a broker or agent in certain circumstances.
Yeah, they should work together in those circumstances. The application is a joint process. It may be quicker and easier for the broker just to fill out what it did last year, but keep in mind the business may have changed. So it is a joint effort with the broker and the insured.
Let's talk about for a few minutes surplus line policies. What is a surplus line policy, and why are businesses forced to go into a surplus lines carrier?
Surplus lines are general risks that the insuring market in a particular state, we use New Jersey in this case, it may be difficult to place coverage, or insurers may refuse to cover the loss. So what New Jersey has is a surplus lines market that allows insureds and is required to go through a broker or an agent to place high risk insureds. So it's a different process that you use, that you have to use a broker or agent, and there are certain exclusions or policy provisions that you have to look at as an insured because they're not governed by the Insurance Services Office in New Jersey. The insurers are allowed to, they are given more leeway to expand or contract coverage. So that's what a surplus lines policy is.
Thank you. I believe we also should mention to the business community that business insurance is not mandatory in New Jersey and most states, unlike automobile insurance in New Jersey, which is mandatory. So this is strictly elective on the part of the business, but certainly if the business seeks to protect its principals and its assets, they must have insurance, as far as I'm concerned.
Yeah, I agree, Lou.
Okay. Let's talk about first party versus third party coverage under a business policy. Could you explain the differentiation of those two features?
Generally, when you get a business policy, an insurance company will wrap multiple coverages within that policy. It may be called a business owner's policy or a business pack. It will include the general liability, which we're talking about today. It will also include first party property, i.e. your building. What happens if there's a hurricane or a flood? So it covers those types of first party coverage as well. So first party, you would insure your own company's property and assets, whereas a liability coverage insures you against claims where third parties sue you.
So if there's a fire or a hurricane or an explosion that creates physical damage to the property, that would be first party coverage. And if there was an accident on the business premises, such as a fall, that would be a third party claim, such as a customer sues a business. Is that right?
Yeah, that's correct. And these days, a lot of insurers will send a package or sell a package of coverage to a business that covers all of the first party and third party claims.
Okay, thank you. We've also heard the terms self-insured limits and deductibles. So what are they in the insurance field?
Sometimes there may be a loss that the insurer and the insured may share. So, for example, a self-insured retention or deductible means that the insured pays the first, say, $10,000 of a loss, and then the insurance company kicks in after that. So it's no different than a deductible on your auto insurance. If you get in a car accident, you have a choice of your deductible. That means that you, meaning the insured, pays up to that amount, and then the insurance company pays the rest.
Thank you. And the last thing I want to discuss is excess and umbrella liability insurance. How do you define that, and what should businesses consider with respect to umbrella or excess policies?
Depending on the size of your company and the nature of your business, your primary liability policy, we use $1 million coverage as an example. It'll cover you for the first $1 million, and that's where most of the premiums, the biggest part of the premium pays for that primary coverage. An excess policy can give you coverage over that amount to give you extra protection. Again, that's a personal decision that each business owner has as to how much liability coverage they need, and that depends on the nature of their business and a lot of other factors as well. So generally, the excess and umbrella policies are much cheaper than the primary layers.
That's an issue that the business should discuss with its agent and broker, am I right? So that there is a dialogue there and the broker and the agent understand what the exposure is to the business and its principals over and above its primary limits.
Absolutely. Again, it's a joint discussion between the insured and its broker or its business attorney to make that determination. But ultimately, that's the insured's decision.
All right. Well, thank you very much, Brian. This concludes our mini seminar with respect to business insurance. And certainly, if you have any questions, you're welcome to contact either myself or Brian, and we'll be happy to give you our legal advice. Keep in mind that what we are discussing today is not legal advice on behalf of Cooper Levenson, and you should consult your personal attorneys for any particular information or questions to be answered, or you can contact us.
Thank you, Lou.
Thank you, Brian.